Okay, so this video is for problem 5-11. So we're writing our closing entries. So just as a reminder, we're closing revenues, expenses, and dividends, and we remember the statement of retained earnings. So that's how we know what account to offset these entries with. So our first entry is going to be to close revenues. So we're looking for revenue accounts. Also, I apologize for so many abbreviations here. I was trying to make it fit just right in our box. Alright, so we're looking for revenue accounts. I see sales revenue over here, and I'll also see an interest revenue. So both of these will need to be closed out. Remember, they carry a normal credit balance, so we will be debiting those. So we will debit sales revenue for $710,000, interest revenue, which is $4,000. And then the total of those is what's going to be our credit to income summary. Remember, that's our temporary holding account. So that's all we got to do for that one. Second is to close expenses. So we're looking for anything that is an expense. So this one with the merchandise company is not just things that end in the word expense, but are also treated as expense. So I'm going to pick out the obvious ones first. So we have rent expense, and we also have depreciation expense. Those are the two that end in the word expense. If you remember, I told you cost of goods sold is another expense. Sales returns and allowances is a contra to revenue, so therefore it's an expense or treated as such, as is sales discount. So everything with the check mark is going to be treated as an expense even if it does not end in the word expense itself. So if you remember, expenses have a normal debit balance, so to close those we will be doing a credit. So our offset, our debit, will be income summary. I don't know the total of those yet, so I'm going to go ahead and list the expenses, get those numbers, and then come back and fill in that amount. If you wanted to go ahead and add up the ones that have a check mark, you're welcome to do that as well. So remember, we're capturing all the ones we put a check mark by that are treated as expenses. And remember, we're just not coming up with anything new. We're just writing down what amount is listed in the box. And the order does not matter here. You could have listed cost of goods sold first. You could list sales discounts next. That does not make any difference. Alright, so now if we add up all 5 of those numbers, they should total up to $453,000. And so our third entry is to close income summary. And before we even do any math and before I move this down, we can already quickly look and see we hit income summary with a credit of $714 and a debit of $453. Before we do anything else, that tells us our revenue is $714, our expenses are $453. Therefore, we do have net income. So we are going to see a debit in this entry for income summary. So kind of think through that process before you even start doing the math. That way you kind of know what to expect. Alright, so remember, for this one I always like to see a T account, just so we can make sure that we are thinking about it correctly, which we just went through that process. But but just so you can also see it, we're grabbing what we did in entries 1 and 2. We're seeing that there is a credit balance of $261,000. So to get this down to 0, we need a debit to fix income summary. So we're going to debit income summary. For $261,000. Remember, had it been a net loss, we would need a credit. And our offset follows the statement of retained earnings, so our credit is retained earnings. And then last is to, oops, I hit the camera, sorry, is to close dividends. Dividends always carries a normal debit balance, so we're going to close it with a credit, and our offset is retained earnings. And remember, we're not coming up with anything new. We're just coming up here to the top to see that dividends has a balance of $55,000, so that's the amount we're going to use for our entry. So that's in the video for problem 5-11.